Okay, so this is lesson 2 in your stock market trading and investing advice from the wealthy investor. Let me just jump into this next section. I want to tell you two things that are frequently overlooked. We talked about in the last video setting up a trading account at a place like TD Ameritrade. Why? Because you are only going to pay $9.95 per trade if you trade on your own, which is what's known as a self-directed investor. And if you trade on your own right now, the trading price that they offer is $9.95. Not bad. Two things about being able to place a trade online on your own. This $9.95 that you're looking at right now, it's called the fee schedule. This $9.95 is tax deductible. So every time you buy a stock and you sell a stock, guess what? You get to deduct this fee off your taxes. Now, there's some serious theories about that, but it really has to do with stimulating the economy. And really, without being negative, the rules in this country are really made for the wealthy, right? You have the opportunity to get in on the same game as the wealthy. And guess what? Instead of putting your money in mutual funds or in a savings account, when you buy a stock, you're getting a tax deduction. If you want a larger tax deduction, you would do something called a broker assisted trade. That's when you actually call it in and you say to a broker, hey, can you help me buy 100 shares of Apple or 52 shares of Apple or just one share of Apple? If you call that in at TD Ameritrade, it's 44.99. Now, I've been trading for 20 years. Rarely, maybe once a year, do I have to call in a trade, but not very often because now you can trade over your phone, you can trade on your desktop, on your laptop, etc., etc. So rarely would I have to call it in. And it's not that I'm being cheap and trying to save money. It's just that most of the time I'm just trading online because I know what it is that I want to buy and what I want to sell. So we've got our trading costs and our tax deduction right here. Well, what is it that we actually need to know next once we're getting involved with trading and investing online, again, as a self-directed investor? There's two things that I want you to be aware of. A, you should start small. Don't take $50,000, $100,000, dump it into account, and just say, I'm going to make a fortune trading and investing online. You're going to need a strategy, and we're going to talk about strategies here in a minute, but I don't want to go too far without telling you to start small. So you choose stocks that you actually like, okay, and you make sure that you can buy them in your online account. And when you're filling out your paperwork for your online account, I want you to request margin. Request margin. Now, a lot of people don't know this, so let me explain this to you. Let's say we've been using here Apple stock. This is a 10-year chart of Apple. And let's say I've put $5,000 into a brokerage account and I started accumulating Apple. I didn't know much about the stock. I know that it's a member of the Dow Jones Industrial Average. I like their products. It has a tendency to rise. Well, had you started accumulating Apple, let's say 10 years ago, and you had margin, something very extraordinary would happen. Now, what is margin? Margin is a line of credit that you get from your broker that is basically like collateral. So if I held Apple stock all this time, my margin, my line of credit, not only would my share price or my assets have grown, my line of credit would also have grown, which allows me to do what? Buy more shares of Apple or another company. If I were invested, let's take a look at another stock. This is a 5-year chart of Disney. Now, those of you who follow me at thewealthyinvestor.net or you're members of witradeschool.com, where you follow my trades, everybody on the internet knows how I feel about Disney. Okay, so I'm just telling you the same old story. I really love this company. Look at the 5-year chart. It's just what we call a beautiful chart with low volatility. But more importantly, I really like the story of Disney. Now, if I open my brokerage account, if I were opening it today and I were just going to start buying some Disney stocks, as my shares rise in value, my line of credit that my broker would extend to me to allow me to buy more shares is also growing. You see, margin is a line of credit secured by your stocks and secured by your cash. So every time I deposit money into my brokerage account and I have margin, my margin grows by the amount of the deposit. Or, to put it in Wall Street terms, my margin is also growing as the value of my assets are growing. So as my Disney shares rise in value, it is collateral for my line of credit. Now, if you're going to take the wealthy investor approach and start to make money in the stock market, you're going to have to understand how to use leverage, and margin is a part of that process. Now, you can't put $500 in an account and start getting margin. I think at TD Ameritrade right now, you have to open the account with at least $2,500 to qualify for margin. But here's what I want you to remember, because this is the biggest lesson of all. Wealthy people use leverage. They use other people's money to make money. You and I have the same exact opportunity if we know what to ask for. So fill out a margin agreement when you open your online trading account. And as the value of your shares grow and rise, guess what's going to happen to that line of credit? It's also going to rise. And you could use that line of credit to purchase more stock. Now, without making it, here's again a chart of Disney. Imagine if I had margin, I put $5,000 in an account. I bought Disney stock 5 years ago at, let's say, $30. We now know the shares are just under 100. Not only would the value of my assets, the stock, have grown, but also my line of credit. Now, when we start to talk about trading versus investing, in a couple of videos down the road, most traders use margin to buy and sell stocks very quickly because you're going to be charged something for using that line of credit. But that line of credit, the interest on that line of credit is also what? Tax deductible, just like what? That brokerage fee. See, this is why that 995 fee, I should say, to buy and sell stocks. You have to understand that wealth building, right, is a skill. It's not hard. You just need someone to explain it to you. And as I like to say at Wealthy Investor Trade School all the time, all wealth is taught. If someone doesn't waltz into your life and explain to you the significance of margin, doesn't explain to you the significance of using leverage and how to use other people's money to make money along with your own, then guess what? You are in effect locked out of choosing a stock like Disney because of its story and its wealth building potential. You are locked out of gravitating towards a stock like Apple, which has grown handsomely over the last 10 years. So, what I want you to remember is that this all wealth is taught. You're going to need the right tools in your online brokerage account. Margin happens to be one of them. So apply for it. Even if you decide you do not want to use that line of credit, it's always there for you. To be successful in the stock market, you're going to have to get to know the right tools that take you to the next level. Margin is one of them. And finally, how do you find investment capital? You can liquidate a mutual fund. You can start investing with as little as $1,000, or you can use your income tax refund. So there's no reason for you to not have an online brokerage account and start the journey of being a successful trader and investor.